السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.
Top-down analysis strategy is so simple yet super effective, and I'm going to show you today how you can do it without needing to be reliant on anyone else in your trading. Now, with that being said, let's dive straight into the chart, and we need to understand first what makes things simple. For me, simplicity in trading comes from the fact that I'm able to define things. Because if I know the definition of the concepts that I'm using, that gives me a lot of clarity and that leaves no room for any confusion. Makes it very objective in a sense. And that leads to, if you don't understand certain concepts here, then you don't understand the definition just yet. Which is perfectly fine, which is why we're going to define every single thing that we use in this top-down analysis. So that starts with, we need to know what a top-down analysis is actually for. What's the purpose? The purpose is to find a draw on liquidity. And once we find that draw on liquidity, we need to find our narrative, that is the PD rate, on how we're going to deliver there. And that is exactly where we then want to look for our entry pattern. So what did I mention first? The first thing I mentioned was finding the draw on liquidity. So what is the draw on liquidity? The draw on liquidity is a target. So what then actually is a target? In price, we have multiple PD rates. Well, nowadays we have millions of PD rates, but I'm sticking to these PD rates that you see right here, which is mitigation block, breaker block, order block, fair value gap, swing high, swing low, swing points, and we have previous candle high and previous candle low. Those are all the PD rates that I use in my chart. Gives me a lot more accuracy if we don't have our chart clustered with all hundreds of PD rates. So a target is a PD rate. Now, why a PD rate? Because price is always moving towards a PD rate. It is our job as traders to find out towards which PD rate we are moving next. And if we can find out towards which PD rate we can move next, that is understanding the direction. And that draw on liquidity and the direction leads to the understanding of the overall thing, the bias. So then how do we even find the draw on liquidity? Well, that is where we are going to start on the monthly time frame right here. Now, before we start with that, I need you to understand that the concepts you are using on certain time frames is dependent on what type of trader you want to be. So what I mean by that is I start on the monthly time frame. I am not going to look at market structure on the monthly time frame. Why not? Because market structure mainly looks at what the next 10 to 5 candles might do. On the monthly time frame, since I'm mainly a day trader, sometimes a swing trader, even a scalper, I don't need to know what the next 5 monthly candles want to do. I need to know what the next monthly candle wants to potentially do. So in order for me to know that, I need to be more focused on the most recent price action. So if you are looking to be a position trader and you want to be a monthly time frame trader right here, that's perfectly fine. You can do that. Then all you need to do is use market structure and concepts a little bit different on the different time frames as well. But the overall premise of this top-down analysis stays the exact same. So in order for me as a scalper, day trader, swing trader to find that draw on liquidity, I want to focus on what the most recent candles can do. So ideally, the current candle that's forming and the next candle after this candle closes. So what I like to refer to is a concept called candle signs. And candle signs is where you look at the previous candle to know what the next candle might actually want to do. Now, if you struggle with finding a draw on liquidity, my advice would be to mark out all the PD rates that I just mentioned and seeing how candle science right there is respecting or disrespecting those PD rates. So right here, we have this monthly fair value gap right there, which we are coming into with an up candle. Now I see right there that we are respecting that monthly fair value gap. Let's remind ourselves again what that candle signs is. Candle signs is where we have a respect candle and we have a disrespect candle. A bearish respect candle is where we have a long wick at the top. That indicates that we are respecting something because this long wick right there indicates that we are having lower time frame fair value gaps actually continuing lower. Where if we have a disrespect candle, for example, we can see we don't have a long wick at the top and we don't have a long wick at the bottom. This indicates that this overall move just had bullish fair value gaps, where the next candle right there creates bearish fair value gaps on the lower time frame, already seen just by looking at the monthly time frame alone. When we are running into a premium array and we are respecting it with a respect candle like that, the next highest probability thing for price action to do is to create a down candle after that. And then what can the down candle actually aim for? Well, what are we always aiming for? What are we always targeting? A PD ray. So again, what are all the PD rays that we have right there? Let's mark them out. We have this previous candle high, previous month's high. We have this previous candle low right there, which is the previous month's low. We have this swing low right there, and we have this swing high. So what is more logical right now for price to actually aim for right here? Well, we are respecting this fair value gap, which is a premium array. We are now seeing a long wick at the top right there. So that's already fair value gaps continuing lower. So right here, are we aiming for the next premium array or the next discount array? Well, this is where my arguments concept comes in. And the arguments concept is the following. Imagine that you are looking at an argument from the outside. And on the left side, you have the bullish person. And on the right side, you have the bearish person. Those two people are arguing what price will actually do next. Which argument is stronger from the bullish person or the bearish person? And the person that has the stronger arguments is the person that will win the argument, which will lead to our understanding of where price will actually most likely head towards next. That is reading the probabilities. In price, in trading, every single little thing is about probabilities. It's not about guesswork. So right here, let's imagine those two people. First, the bearish person starts right there. Well, we have created a bearish fair value gap right there, which we are currently coming into. And as we are coming into that, we are failing to create a new fair value gap higher right there, because we traded back into that first candle right there. This is now a respect candle, indicating that we have fair value gaps on a lower time frame to continue lower off of, to now target that previous month low at least, and potentially target even lower right there. And the bullish person says, well, my counter argument right here is that we have two up candles. Okay, well, thank you for your argument. It's completely useless though. So right here, which one do you think, objectively speaking, is the higher probability side right now? I would argue lower prices. That's all we currently have going for us. And this is why it's so important to start on the monthly, because the monthly time frame is the strongest time frame. So if we understand the next monthly candle, we understand a lot of 1 minute candles as well. So based on that argument, what then becomes the most likely draw on liquidity? This previous candle low right there. Now, once we reach that previous candle low, we can now aim for potentially the next discount array, which is sitting right there. If we're bearish, we are simply aiming for constantly the next discount array that we see on the chart. So the next discount array in this case is that swing low. So right here, we have somewhat of an understanding of what the next draw on liquidity might be. Do we have right here a narrative? All right, what then is a narrative? Well, a narrative is when we understand the draw on liquidity and we understand the direction, we overall understand the bias. And the bias is a certain direction. Will we continue lower? Will we continue higher? And what target are we reaching for? Well, that target right there, the draw on liquidity, we will push lower towards that by narrative. So the narrative is, if we are going lower, where are we going lower from? In other words, the narrative is the PD array that will deliver us towards the draw on liquidity, that will get us there. And the narrative is where I want to look for fair value gaps. So all I want to do right now is I want to go from the monthly to the weekly right now. Because on the monthly, we do not have a fair value gap that can push us lower currently, where we can actually look for an entry right now. We've already traded into that one. That one is not relevant anymore. So let's drop into the weekly. And on the weekly right here, do we currently have a fair value gap that we can continue lower from? No. Is it in the making? Yes, it is. So potentially, after this weekly candle closes right there, could be interesting next week. But that is only the case if this candle right now will be a consolidation and will stay right there and will not already expand lower. How can we know that? By going again into the daily right now to find what we have on the daily time frame. And before we do that, what I like to do is, if the monthly draw on liquidity right there is quite far, that can still be a draw on liquidity, of course. But if we have any other discount array sitting right here in the form of that fair value gap, for example, and this previous week low, then I like to use those as closer discount arrays. The reason for that is because, of course, the lower you expect price to go, the lower probability essentially. Where price, it is quite easy for it to reach those closer PD rates. So it's almost guaranteed that either this week we will trade into that previous week low, or next week we will trade into that fair value gap right there. It's almost guaranteed. And the further the PD array is that is our drawn liquidity, the lower probability it actually is. And we can now look at, all right, well, we have this drawn liquidity. If we want to push lower right there, how can we actually deliver there? So which premium array will be responsible for pushing into that discount array right there? Where, let's look at the daily time frame, and I'm going to remove the weekly value gap. We already have this daily fair value gap sitting right there, which we could potentially continue lower from. And if we zoom in a little bit, again, looking at those daily candles, then what do we actually see? We see that we have this candle, that Monday right there, coming into the daily value gap already. Seems like it was respecting it a little bit. Why is that not holding? Exactly what we're going to go over as well. Then we have this Tuesday right there, huge wick at the top. So what is the most likely thing for this next candle that is currently forming to do? It is most likely going to reach this previous candle low. Again, I can be completely wrong. All I'm doing right there is, again, stacking up the arguments. What is the bearish person saying right here? It is arguing that we have fair value gaps right there, that we are taking out lows. The monthly is even bearish. We have those daily value gaps. We are respecting those daily value gaps seen through candle signs right there, a long wick at the top, where the bullish person is having a counter argument. And that counter argument is, well, I have 3 bullish candles and I'm not creating a fair value gap. Okay, well, again, then it becomes quite obvious that the higher probability thing for price to do is to continue lower, at least towards that previous candle low right there. Will that happen guaranteed? No, because there's still a probability right there that we might want to continue higher. But I don't want to guess. I want the probabilities on my side in trading. And that leads to overall becoming a profitable trader. So this is the first discount rate that we can reach for. After that is that previous week low that we had, which is also a daily swing low right there. But now it's also quite important to understand which day can actually be responsible for us to push lower, to continue lower. And that is where we need to understand volatility, which is also known as time. We need to trade at the right time in the market. If we want to know if a day itself will be volatile enough for price to push lower and to actually continue lower off of that, then here, if we are looking at the dollar, DXY, the US dollar, then we want to look at US dollar red folder news. Where if we look at this week, and we dissect it again by looking at the candles, then we see Monday is already coming into that daily value gap, having somewhat of a rejection, but is not getting respected on the next candle. Why is that? Monday didn't have volatility in that day. Monday didn't have red folder news, and red folder news brings that energy to the market. If the market wants to move, then it needs energy. Just like if we want to move, we also need energy. In order for me to sit here and to move, I need some kind of energy, right? I can't just be completely empty, no energy, and then try to move. It's not going to work. It's the same for the market. So in order for the market to make this push lower, it needs energy in the form of that red folder news when we are looking right here if the day actually wants to continue lower. So that's why that rejection is not that relevant. The rejection is relevant when you have the day and the rejection day right there on a day that actually has news supporting the idea. Red folder news right there to continue lower off of that. That is the relevant part. And on this day, we had red folder news. And on Wednesday, red folder news as well for the US dollar. Same for Thursday and Friday as well. So now we have the volatility supporting the idea that we can actually continue lower as well. But this is also where it now gets extremely tricky. If you follow the same schedule from the monthly down to the weekly to the daily, and you do not find a clear direction, you do not find a clear narrative, which in order for you to get a narrative, you first need to have a clear direction. If you do not find that, then at the daily is the cutoff. That is where you stop. You do not want to go into the 4-hour and only trade off of a 4-hour ID. Again, if you are just starting out, that would be my advice. Eventually, I can make a separate video on that as well, where you could potentially eventually look into that, but the highest probability is always going to be where you have the monthly, the weekly, and ideally the daily supporting the ID. But a minimum of the daily supporting the ID. If you do not have the daily, nor the weekly, nor the monthly supporting the ID, that's not enough for me. So here we have monthly, weekly, and daily direction, so the drawn liquidity supporting the ID, where we're quite confident about the drawn liquidity, and we have a daily narrative. So in that daily narrative right now, that is where you can go into the 4 hour right here to look at 4 hour, same exact thing, where the 4 hour, if we mark out every PDRA, we have again this fair value gap, which we might continue lower off of. This becomes a swing low sitting right there, where if we now want to continue lower, then this premium array or a new premium array after that as well, new 4 hour value gap lower, could be very nice to continue lower off of as well. And this is where you are also allowed to go into the 1 hour, to go into the 15 minute. So if we do that, then of course, now we are reaching the idea of scalping, where if you keep on doing this, you are going to be a scalper. If you want to be a day trader or a swing trader, you are going to stop at a certain time frame. So the type of trader you are, again, I can't fill that in for you. There's not one type of trader that is better than the other. It's whatever you resonate with, whatever fits your personality, whatever fits your overall lifestyle as well. So on which time frame you stop, that is also depending on which type of trader you want to be. Again, the PD array we find right there is the PD array once we reach that and we sting into that right there, that is exactly the PD array that we now want to go into the lower time frame right there to look for an entry actually. So the narrative and the overall goal of the top-down analysis, like we mentioned, the goal is to find the PD array that will push price lower or higher. And in that PD array, that is the boundary for our entry pattern. So in that PD array, once we reach that PD array, we want to look in that PD array again for our entry pattern, for our entry confirmation. That is the goal of a top-down analysis. Now, there's a reason why I started this video on the US dollar, because the dollar sets the tone. Where if the dollar is clear and we can see it's either moving higher or lower, and in this case moving lower, then the indices, for example, will most likely move higher as well. And the other forex pairs, for example, EU, GU, that have US dollar in the second part of the ticker name, those will move higher. And US dollar JPY, US dollar Canadian dollar that have US dollar in the first part of the ticker name, they will likely move lower again. So the analysis on the other instruments will become a lot easier if we simply understand one single instrument in the form of the US dollar. Because heading into that instrument, into the indices, E-mini S&P 500 for example, or EU, that makes it quite clear what they want to do as well. Now, of course, the dollar itself will not always be clear. So if the dollar is not clear to you, then what you would want to do is you want to move on to the crosses. And the crosses are these right here. These are all the cross pairs. These are less directly linked. For example, Euro US dollar is directly inversely correlated with the US dollar as well. So it's moving the exact opposite of what the US dollar is doing. But Australian dollar, Canadian dollar is less dependent on what the dollar is actually currently doing at that moment in time. So what you would want to do for the crosses is you again want to focus on the crosses that have news supporting the ID throughout the week. So for example, you can see I currently only have GBP pairs right there on my potential interest list. And that is because we only have GBP and US dollar news supporting the ID trading this week. So I want to look at GBP crosses right there if the dollar is not clear to me. But if the dollar is clear, I want to simply look at the US dollar and trading the Forex majors, EU, GU, and the indices, etc. Now, this is not all, because now we're going to move on to an actual pair analysis and another indices analysis as well. But you do also understand on what you are supposed to do if the dollar is not clear. Because again, a top-down analysis is not always going to give you a clear direction and a clear narrative. But that's not the point. It's to find those pairs and instruments that do have a clear direction and a clear narrative. And that again leads back to the understanding of an argument. If we have that argument, and both arguments of the market are pretty good or they're pretty bad, then that leads to a 50-50 argument. That leads to a 50-50 understanding of what price can actually do next. We don't want to be 50-50. We want to almost be 100% sure that the probabilities are on our side. Now, quickly going over the daily, then what do we see? We see the rejection. We are following through a little bit lower as well. But we do have a huge sweep of that previous day low, which I don't necessarily like. Again, the only real option right now is still to continue lower. It's not a confirmed sweep just yet, unless we start creating a bullish fair value gap right there. Then I would argue, all right, we might actually want to continue higher. But right here, I would still want to look at lower prices as well. But ideally, I personally would want to wait until we again have a new fair value gap going below that low, below this low right there. That indicates for me that we are getting comfortable below that low. So we are not actually sweeping it. We are not trapping that liquidity, because then people are allowed to get out of their position, etc. So we can confidently move lower as well. That is exactly what I'll be looking at. That would be the ideal scenario. Now, looking at Australian dollar, US dollar right here. Again, same premise. We have this monthly fair value gap right there. We are currently respecting that by this candle that we see right there. What can the next candle potentially do? Well, it again fails to create this bearish fair value gap right there that was in the making at that moment in time. Because if we closed below that low, we would have created a bearish fair value gap, which would have been another bearish argument. But now we take away that argument by moving higher and by not creating that fair value gap. Perfect. So if we want to continue higher, we have already taken the previous month high. We can now look at that swing high. That is the next premium array. See how much easier that is, because again, I'm doing that quite fast because I already understand what the dollar is most likely going to do. Where Australian dollar, US dollar, if the dollar is going lower, then Australian dollar, US dollar is most likely going higher. Now, I also need you to understand that not every pair will be as clean as the other pair. Meaning Australian dollar, US dollar might be a little bit more clean, might be nicer price action than New Zealand dollar, US dollar, for example. So that is where you again go over the arguments in those different pairs. Now, moving on to the weekly right here, going over it a little bit faster, then we see, do we have a weekly value gap currently to push higher from? No. Okay, so we can move into the daily. But before we do that, let's look at some premium arrays right here. Previous candle high, previous week high. We have a weekly fair value gap sitting right there as well. Now, if we want to continue higher, then what can we continue higher from? The narrative. Let's look at the daily time frame. On the daily, we have this fair value gap right there, and we have this mitigation block, which I also like to call a fair value area right there, which we can push higher from. We have news supporting the ID on that Tuesday, so that is a confident low. That's a strong low right there. If we now want to look at higher prices again, then what should we do? Go into the 4-hour right here to find now a new fair value gap, which we can actually look to continue higher from. 4-hour, no fair value gap just yet. Could be created later on, later on this Wednesday, whilst I'm recording it. But on the 1-hour, what we saw is we already had fair value gaps right there supporting the ID to continue higher off of that as well. And we are leaving behind new 1-hour fair value gaps as well. Perfect. Off of those fair value gaps, off of the new 4-hour value gap that could be created, off of a new 1-hour value gap that could also be created, we can then look at our entry. That is where you want to combine those time frames right now. So if I'm looking at a 4-hour fair value gap, which I want to see higher prices from, then what I would want to do, if, for example, this 4-hour value gap gets created higher right there and we trade back into that, I would want to look at a 5-minute entry confirmation. After this video, you can look at other videos that I created where I fully go over the entry confirmations. For example, Market Mastery, full market maker model guide. That's where I go over almost everything. That's in perfect alignment with this as well. And those fair value gaps is where we can look for an entry to then target, again, the drawn liquidity that we had right there at the top. If we take a look at the indices, it's the exact same thing. If we take a look at the indices right there, it's the exact same thing. And again, you can combine these time frames as crazy as you want to, and you can make it as crazy as you want to as well. Because if we look at the monthly right here, we're just confidently moving higher. All right, I would argue the monthly right here, we're at all-time highs. We don't really have a clear drawn liquidity on the monthly just yet. So let's move to the weekly. Do we have something on the weekly? Well, if we are in desperation, then we can always mark out previous candles highs and previous candle lows right there to potentially get an idea of what it wants to do. But I would argue the weekly right here is also not super clear. If you're struggling with the top-down analysis, I can see why this right here would be a struggle in the beginning. Now, if we move on to the daily, then on the daily right here, we are not creating a new fair value gap higher right there. So overall, at this moment in time, I would argue, well, that's a little bit tricky. What do we want to do? Do we want to continue higher? Do we want to continue lower right there? I'm not too certain right here. But after we create a candle like this, it already becomes a little bit more clear because now we are respecting a previous candle low. And that is again a discount array right there. So if we want to continue higher, then where can we actually continue higher from? And this is where we need to understand as well. What I'm currently doing is an example which I said, if we don't have daily narrative, you want to cut it off there. You want to stop it. If you're a scalper, for example, only trading the 1 minute time frame, then this is where you can still follow through. Because right here on the 4 hour, what are we seeing? We have a 4 hour order block to the left right there. After that, more importantly, we are creating 4 hour fair value gaps higher as well, sitting right there, which we can continue higher from and which we do. But eventually this whole understanding, moving on to the 1 hour right there, 1 hour fair value gap, 1 hour order block, moving even on to the 15 minute right there, then moving on to the 5 minute to the 1 minute, you can again see how that then leads to eventually a 1 minute trade, to eventually a scalp. So let's zoom out a bit right here on the 4 hour. If we now go to current price action, what can we actually reach for? Well, if we take a look at the daily candle close really quick, based on candle signs, we see a huge up candle. That's again a disrespect candle. So what can we reach for? Well, this previous candle high, most likely, and this swing high in the form again of that premium array as well. So now we need to find a fair value gap ideally, or any discount array which we can continue higher from. On the 4 hour, do we have anything at this moment in time? We have that 4 hour value gap. Now the question becomes, do we already want to retrace into that 4 hour value gap or do we already want to continue higher? So very simply said, do we already have a fair value gap right there pushing higher as well? For example, this 1 hour fair value gap sitting right there. If we already create at equities open, because equities open is of course crucial to actually trade right there for ES. If equities open stings into those discount arrays, creates a new fair value gap higher already, for example, on the 50 minute, then we can just simply look to continue higher already. Where all we then need is a clear discount array in the form of, ideally for me, it's usually 9 out of 10 times, it's a fair value gap that we can actually look to continue higher from. So before the next thing, I want to quickly define everything again. But the first step is, again, the drawn liquidity, understanding what that target might be, which is again, understanding the PD rays that I use as well. You can just simply copy them if you want to. After that, if we can create that argument again, looking at fair value gaps, looking at candle signs, the previous candle high, previous candle low, respect, disrespect candle, to then see the argument between the bullish person and the bearish person, seeing which argument is stronger. Once we find a stronger argument, we move on to now find the narrative. That is where a fair value gap ideally comes in. Once we find a fair value gap, by going down the time frames, which is pushing towards that drawn liquidity, that is exactly the fair value gap where we ideally want to trade off of. Because that PD array is the PD array where we are looking for our entry pattern. So for example, if we expect this PD array right there to hold, again, we need time to support ID. So currently I would not want to trade off of that PD array, but that PD array is where we would now look for our entry pattern. And time frames are going to depend on what type of trader you want to be.
السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.